session, back in his bearish for the block right here. Optical chart entry. We're entering into Q2 of Q2 afternoon session. Not too far from the midnight open, New York open. Bearish for the block. I want to look for a short position. Prices coming down. What is this? I think this is the overlapping of. Oh, that's a fib retracement. We're in our CIBI, so we're working on our learning P&L right now. Here's our drawn liquidity here. Buy side. Moving over. We have more buy side up here, more swing highs. Optical trade entry is my ultimate area of interest. Learning P&L, again, if we were to answer in here, stop loss at 10 points. We're looking at getting out here. If it reverses, goes against us here. We can see this as a chain instead of delivery. If we project this down, $2.5 is almost the low of Q2. Wait, yeah. 4 is at the low. 1.5 is where we can see this our first initial retracement. I don't like the I don't see an immediate setup when we have a low, high, low, like a higher high here, taking this block here, measuring that down to 2. We took out this sell side here, bullish short block. Idea is that we could reverse and go up higher. Let's go down to the 15 second to get an understanding of whether or not we've reached our terminus. 2.5 is here. This last low be here. Down, up, down, sideways. The question is, if we enter in here, where would our stop loss be for a long position? Here's 10 points coming up here. I don't know. We look pretty bearish right now, so there we go. Ooh, going down in a fury. Optical trend entry, boom. We are working in this fair value gap right in here, this price leg here. We are delivering from a higher time frame PD array. So what we can witness here is just like a retracement. See here, daily, CIBI, it's going to daily. Daily, CIBI, so this is inverse, come back down into it, move up higher is the idea. And sell side is here. Where is this from? Oh, from over here. Previous sell side. Boom, fair value gap here. I want to get rid of this. We could go down all the way to 4. Standard deviations of this. We are at 2.5, which lines up with this order block right here. So, taking a long position here, 10 points will take us to these lows here, this fair value gap here. That's reasonable if we start off from this quarter. And I'll see this. We are in optical trade entry. This is 7.8. I would like for it to go a little bit lower, maybe down, take out these lows down here to consider taking a position. Here we have this fair value gap right here on the 5. Same with the 1. And so this is higher time frame, PD Array affirming, going back into this 1 hour SIBI. Maybe we can get a retracement from here. Having threshold. Let's take a look at this 15-minute. Oh, nicely done. 2.5 here of this 15-minute OB. Nice. So we're coming down to a higher time frame, PD Array at this point. Let's see if we can reuse this one and take it to these lows here. That's real deep on the 15. So coming down in here, it's a potential of this 1 hour SIBI inverse SIBI. Show you what I mean. Oh, we do have a balanced price range. I didn't realize this on the hourly. This is a balanced price range, but we do come up, hit this bearish for the block. Now we have this balanced price range that we're working in. ICT said if had we taken out these sides here, coming down, not to consider this as a return because we've taken out a buy side here. Although this is within this range here. This is on the sell side or buy side of the curve. You want to look at sell side liquidity being taken on the or buy side being taken on the sell side of the curve, right? So we're still within this market maker model. Optical trade entry for a short on the higher time frame, like the 4 hours up here. So I do believe we have some ways to go. And I think we're now beginning to retrace. There we go. So I was right about this. I'll take a call here. Kind of late to the party as I was demonstrating. So 10 points is this low here. And this could just be a return to this will be run up in here. So not the best entry. As you can see, this is kind of like one of those FOMO trades. And we almost go to optical trade entry, but not quite. And we're probably going to get stopped out. Yep, stopped out. Or maybe not stopped out. So this is what we call chasing. And, you know, we do have a little 5-minute, 1-minute chain instead of delivery. There we go, stopped out. So maybe we don't. Maybe this was stage 1. Again, where's the drawn liquidity? We might have SMTs up there with yeah, kind of do have SMTs with ES. And all this was here was just a run up into this fair value gap, the high of this hourly 50. Now we're back. So this will be an ideal area to take a long position. 10 points. Boom is here. And then we can take this up to these sides here, given that we came down to these lows already. So take a call here. So now we're at 1475. 10 points is here. This is a bullish short block right here. Came down to it. You know what I'm saying? Like price can come down here as it did. Now we're moving up, and we come down here on the 5 to this, well, to the low of Q2. And get rid of this for now. We do have this 15-minute fair value gap with 2 minutes left in the 2 minutes left. So come down to the New York AM. New York afternoon open, New York lunch open. Boom, supports, boom. Maybe we can continue moving up higher. But the fact that we hit this higher time frame optical chart entry on the 15, um, you know, here was our best entry here. Notice how things get kind of wonky, not highly probable when we're inside of a range. And then that's when we have to rely on the higher time frame to get an idea of where we are. Where the entire time we could be right in our analysis. It's just that, see, we would have been stopped out of this. Here's 10 points right here. And we're going into Q3. So accumulation, manipulation, distribution, I don't know. But um, this is where things get kind of wonky given these conditions right here. But this was highly optical, highly optimal over here. And over here, the shorts that we had, even the shorts that we were down by like 30 points was on higher time frame. It was good. So if you're trading off of the higher time frame, like the 15 hourly, yeah, 30 points you will definitely need for your your stop loss. But if you're trading on the one like this, no, you shouldn't need that many. So my ultimate stop loss will be here. If this gets hit, then I'm done for the day. So we're out there. So this is right, optical trend entry, stage one, drawing liquidity or market structure shift here, market structure shift here. And if you take a look at this, we went all out to equilibrium. Boom. So when you're seeing like, all right, we're moving up, but why are we moving up? It's for stage one, market maker model. And here's two down here. And let's see here. Here's 4 standard deviation of this manipulation leg here. So this is what ICT was saying. It's high, low, high, high. Come down, run up. You want to see it run into the highest OB, which is this one here. See how we hit that? Boom. Border block, boom. Then we go down. Notice how we went to 0.35. Then the question is, are we done? Right? Are we done retracing down? We went to 3.5. Are we now going to reverse the reversal? We came to this fair value gap right here, almost in equilibrium. So if we enter in here for a long position, stop loss will have to be 20 points. 10 points is here. I don't think I can afford that. So I'm not going to take that. Second thing is, here we have this up closing candle. You got to think, yeah, just because we're going up, that doesn't mean that it should be long bullish. We have a fair value gap here. This could be a bearish order block. Like this here can be a bearish order block if we close below it. Here we are in our 1 hour order block, right? And then we're at the low. Let me get rid of this. We're at the low of this 1 hour CIVI inverse. And also we are in a balanced price range too on the hourly. So boom, we come all the way down to this balanced price range. That's a perfect entry to get in on. But one of the things that we want to do is get confirmation from this current 1 minute 2.5. This is absolutely perfect. Perfect, 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 perfect. Now we just want to make sure that we have 10-point stop loss. Where would that entry be? Right here. To these lows here. So that means we can get in as soon as we hit like where we are right now. About here, stop loss, almost 10 points down there. Take profit up here. Now my question to you is, where is our manipulation leg to suggest that we're done going down and we can go higher? Where is our accumulation manipulation distribution? Where is stage 2 of our market maker sell model? Here we go here. Stage 1, run down. Could this have been stage 2? Right. So 10-point stop loss here, that's a bit tight. But with conviction of what we've seen so far going here, we want to take it. Um, so let's see what happens. This isn't quite 10. This is 10. Well, that's a little bit more than 10. So we might have accumulation here, and this could be seen as time distortion. We're at 230 or 220. Q4 is 238. We just came in a new hourly. Well, we're still within the same hour. This is it started here. This is where right here. Boom. And that's another thing I look at. It's like starting a new hour. We ran up, almost hit constant encroachment, I think. Yeah, we did hit constant encroachment of this hourly wick. Then we retrace after going into a quarterly shift. So I'll add that note here. Quarterly shift, new hour, model 14 plus high time frame, OT retracement. Take position for long if in discount, vice versa for premium. Align AMD, align with AMD. AMD and slash or market maker model. So this is all accumulation, 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 accumulation. Now this could be a bearish shorter block here. We got on the 5. Right, could be a bearish shorter block. I want to get rid of this. We can always come back and add it. And let's make this, chop that there, get rid of that. Again, this is the 1 hour CIVI. We got 30 more minutes left in this hour. Um, How many in the 15? 8 more minutes in this 15 interval. Again, balanced price range. This was inverse. This SIBI was inverse here, then back down and back in. So I think this area is balanced, or at least it's trying to be balanced. And then again, we see here optical trade entries right here. We measure this OB here, and we get 2.5 projection. 2253 is here. Boom. See that? Perfect with higher time frame LTE. Higher time frame LTE is this right here. Boom. -3. So that's what we're dealing with. That's what we're in right now. I took a trade up here a bit in premium, a bit early. I say premium of this price leg right here. Let's take this off. Um, it was up here. We wanted to wait till we get down here, and that's where we hit equilibrium here, which down here is the low of this SIBI here, or BISI here in discount on the 15, and then on the hourly, that's the low of this balanced price range, inverse fair value gap. Boom. So that's what I was looking at. On the 5, small little fair value gap right here, which bodies are respecting. And yeah, that's pretty much all that I see. So I'll get rid of this. So we do have our manipulation leg here. This is where we got in initially. So this is what we want to look for. No. -2, 2.5 again. That's where we can expect a yes retracement. I feel like we did this already. 1.5 we can expect our first retracement, but this is like SMR. Smart money reversal. Look how that lines up nicely. So if this is in fact going to be a market maker model, this is stage 1, and we come up to 2. This is 3. This is 1, 2. So 3 standard deviations. Half of this will be a -1. Between these two here, if you want to geek out. Yeah. We have this inverse here. Take that out. So it's like market structure shift here. Is this? I gotta be better about this, man. I wish we can get rid of these lines out here. These lines are dash, offset, padding. I don't know. If we reduce here, that's 5. I feel like I don't see any visible changes here. And that's better. But these are still kind of darkened. Hmm. That's boxes, labels, lines. So the line business, that's on like the micro level, like this here. See how we don't have any lines, we just have the labels. I like the lines for right now. I like the lines. I gotta get better at looking at the time, but lines are my handicap right now. So I fuck with the lines. Boxes, you can go without the boxes. Oh, is that what that is? The lines stay. The colors are eliminated. But if you go to a higher time frame like the 5, this looks like stage 1. Boom. Constant encroachment on this wick here. Which if it is, then that's fine. That's fine. Um, Take our sell side here or buy side here. Run up, bearish for the block right here on the 5, as well as optical trade entry, as well as reversal of this right here. So then boom. Now we get eliminated. So when I was asking you like how are you sure like this here is our manipulation leg, right? And saying like, hey, like this is inside of a range, like we can go in either direction, trying to catch a continuation play in here. It can work. It's just that the probabilities are not as high. So that's that. Um, yeah, we're probably gonna hit that. There we go. One thing we could look here is at this. Get rid of this one. So kind of like stage 1, boom. Yeah. So get rid of that as well. -4 lines up right here. Standard deviation lines up right here. And we got an hour and a half left in this session. Ooh. I was hoping this fair value gap can hold on the 15. We do have this inverse here right there. So it's like which inverse do we go with? And notice how you have accumulation, manipulation, stage 1, stage 2. I'll wait till like Q4 before we enter into a position. See me here, I'll be boom, keep on shorting, keep on buying, keep on buying, keep on buying, right? Look at that New York AM open. It was just saying nope. Here we are going to New York. Punch lows. And what do we do here? Take this one. Two 2.5 is here. Now what do you want to see on like a lower time frame? Like a fair value gap coming out of that. That's like our displacement leg. Here's another. Nah, we don't get much there. But we have this last one here. Yeah, we're kind of way off of that, so probably still got some more room to go. And as I suspected, you can take this one here, -1. We could look at this one here again, -1. Probably going for these New York lunch lows down here, or New York lows. Here is the 1 minute SOB within a range, -2. And then we saw a few go down to like -2.5. Okay, retracement reversal. That's supposed to happen. Like we're supposed to go to -2, 2.5, and we're supposed to retrace up. That's valid. But higher time frame prevails. Higher time frame says we're bearish. This is just going to be simply a pullback. Now let's go back to the 15. Now we got that fair value gap. I'll take 2 here. So 10 points is here. You're about to be eliminated, right, into that fair value gap. You want it to be at the low of that fair value gap. So 16 points, but you've doubled up. Should really be stop loss of 5. Here we have the most obvious drawn liquidity here. These smooth highs here. Accumulation. Accumulation. Boom. Let's see. This price gonna get hit. And what is this? Bearish for the block. That's all that this is. You know, if you want to take a long position, you want to draw on liquidity. Preferably a higher time frame drawn liquidity. That is going to be your best bet. That is what you need to minimize your trades, especially in your account, to taking solely those types of trades. Draws and liquidity, higher time frame. Yep, this is for a standard deviation right here, up here. So the question is, do you have our AMD setup? Accumulation, manipulation. We're going into Q4. Possibly yes. Accumulation. Accumulation. Manipulation. And then possible distribution into Q4. Little 1 minute change day delivery. Preferably you want a 5 minute change day delivery. By the way things are looking, there's no 5 minute change day delivery. We do have this 5 minute order block right here. It's one of those Lumi plays. I want to see if this works. I'm going to reduce that just a little bit. That's why we're in demo, to be able to do that. We need this to at least turn green. On the 5, question is, at least wait for 1 minute change of steady delivery into higher time frame order block like right here. Then we get that. Then we can measure order block down here. Look how we wick down here. Then boom. So coming in here would have been better. So this is perfect. This is 10. So the thing is you look for your change of steady delivery. Get out your handy dandy risk reward tool. Put it on mean threshold. Measure 10 points down, right? Or put your entry at mean threshold. Uh, yep, measure 10 points down and let that be that. But again, we don't have a 5 minute chain instead of delivery. Had we closed above this after hitting this, by all means, answer. But where are we going to put our stop loss? This was like either be wrong fast and early, rather be wrong late and long. Because you can always recuperate from a small, quick loss, like up here, small. All right, fuck it. Up here, lost. Fine, fuck it. That's why you hear people say, "Oh, traders they have a low win to reward ratio," but their wins, the earnings from the wins, it's way more than the losses, than the small little losses. But for ICT, we know when to get in. We know, hey, of course, starting out in the beginning, you're gonna have a lot of those situations, which is why I'm saying for people don't have like a 20, 30 point stop loss unless you're on a higher time frame. But you're supposed to be on a lower time frame. You can minimize that 20, 30 point stop loss to like 10 points, like this here, right? Um, and that's how you get those big moves for 80 points plus 50, 40, 50, 80 points plus moves. So here it is here. Bullish order block, bullish order block, chain state delivery, 50% of this mean threshold. That's where we enter in. 10 points down, and we want to move up. Let's try these highs up here. And here we are in Q4. So we want to see 50% up here being supported of this bullish order block chain state delivery. Not bad. Let's see if we can come up to here. Small level 2. Well, this looks like accumulation, manipulation, distribution, market structure shift here, Tron liquidity here, fair value gap, body's holding. Now, I saw this and I jumped in. I got in up here though. Eee. Bearish for the block, boom. Inverse fair value gap holding, boom. Inverse again. Body's just tipping in it, tipping in it, tipping in it. Now we're moving up. Could have gotten, should have just waited here. You know, seeing this, I'm like, all right, I want a retracement back here. Why? Because of this. This is why. Optical trade entry. Body's almost respecting it. 72. Body's respecting it. At least wicks are. Perfect. This would have been a better entry. And that's what I had here, which also aligns with the constant encroachment of this wick here, or mean threshold of this body here. That's how that works. So how are we on the day? I know we're not supposed to be doing this. It's not showing us how we are today. Oh, here, we could look at these. These were losses I've taken trying to catch the bottom to go higher. This was a good one. This was a good one. This was a good one. And these are from yesterday, the day before. These trades here, I'll admit, they weren't um, thought out. So we can look at everything, of course, from the 24th and going up. Um, but these plays, they were thought out and a bit overzealous, but hey, that's what happens. So I was expecting a explosive move into Q4 and we just don't have it. It's just lingering. I don't like that. But this is 8 to 1 where we are here. From here, this is wow. What is this here? Is this 64 or 34? Getting at 35. It's about 3 to 1. You know, if we come down to 10, it's right here. As you can see, we got in here. We would have been stopped out, right? So I was saying, it's like find your low, put your stop loss there, then measure 10 points from up there. And this is the earliest you can get on the trade. Drill that in. And then we have accumulation, manipulation, run up. And here's a manipulation leg. That's way too high. I'm not taking that one. Or I'll take this last OB here. 2.5 lines up nicely with these highs up here. So not sure what price is doing. It's probably going to be moving sideways or eventually maybe going into 3 p.m. Quarterly shift, new hourly shift. We can get some movement, but this bores me. I like it to be fast and furious, like from this morning, even from this afternoon. So I don't know. I'll probably keep the recording going, but constant crushment of this 15 wick here. That's nice. fit how that looks now. And we could say this is stage one, stage two. We might get like our stage three manipulation in here. Oh, I thought this OB was gonna hold. Take out drawn liquidity here. Maybe it's this one. That's why you keep your stops really tight. Notice how we didn't get the type of movement we're looking for at Q4. Let you know that hey, nah, this ain't it. Higher time frame, stage one, stage two. This is bull shorter block here on the 5. And we're probably gonna continue going lower. Or bearish shorter block, excuse me. And we got a first retracement, -1, 1.5. That's all that is here. Retracement up. -2.5 is down here. So I'll take a call position down here. Buy, sell. Supposed to be at the low here, but that's too much for me. Take profit. I don't know where to take profit would be. Right here, maybe. But I got some errands to run, so I think this is going to be eliminated. If it is, so be it. Two 2.5 right here in New York Open, New York Afternoon Open, which is a sell side liquidity right here. Oh, interesting. And boom. It gets hit. Then we're out. See how that works? So again, now we're gonna see some speed. Why do I say that? Because this was some very weak buy side action. Phew, now we should see some speed going up. Question is, where was this projection to? This one here. We didn't even get any real ones here. Here's our 2.5, 3.5. Measure this here. Optical trade entry for a short. Yep, right here. Right here. Optical trade entry. Boom, boom, then boom. Did we optical trade entry this? No. When should we optical trade entry? Is it from here to here? Thinking, oh, we're gonna come out and optical trade. No. We're in a sell model. So you want to optical trade entry from your opening range, which is from high to low. Now you have opening range. That's what we're operating inside of optical trade entries. Boom, right here. Now again, this here looks promising. So we had to take our sales out here. Now we get some momentum coming up. And that's why ST says like put your stop loss just a few pips below. So this is 2, right? This is on the lower time frame. Last will be on the lower time frame, higher time frame. I'll add this one in here too. OTE retracement, high time frame plus low time frame, OB projection, 2.5. 618. When in a market maker sell model, OTE the price leg opening range and drill down to lower time frame. Drill down to lower time frame and project OB. This will be a bullish OB. Project bullish OB for 2.5 confluence with high time frame OT. All right, so let me show you what I mean here. Take these highs up here, down here, and low time frame. Low, lower low, swing low. 2.5 is here, 3, 3.5, 4. So which one is it? Is it 2.5 or what? Traditionally, the last OB, if that goes to 2.5, like down here, I'll take it and look 1, 2, 3, 4, 5 kind of run. Boom, reversal. And seeing this, you might be bullish. There's nothing wrong with that. You seeing this here? 4 is down here. we measure this entire one down here. Oh, 3, 3.5. Where's 2, 2.5 here? It's like your best bet, right? So we can change this to, and we can rejot this back down to like 1. It's like failed AMD here, which, happens. I want a background on this. Background color, like gray. Background. Oh no, not that. Nah, I'll use one color. Fib TE. And here we go. So right here will be answer for short. Right. Copy that. And then we can just copy image, download the image. And that's it. Get rid of this. And we're still coming down. Stage 1, stage 2. And I think we can get rid of this here. That's why it's, patient place. If you're anticipating like a reversal, that's fine. Just ask yourself, market maker model, what stage are we in? Here's 2 down here. 2's down here. Right, of this OB here. -1, 1.5. Do we have any? Yes, New York lunch open here. Boom, sell side here. Boom, hit. We also have this fair value down here. This looks a bit balanced. Boom. It's like I want to get in, I want to get in, I want to get in. I just want to get in. All right, so we're now in a new quarter, right? Boom. 0.5 could be the area we can run into. -1. I would like to see a move down here on the 5. This is a 15-minute order block. This might be the play. We have a potential inverse right here. Accumulation. Could we get manipulation? Is this manipulation? Could we inverse this here? If we can inverse this here, I'll consider taking a short or a call. Now, if we come up here, 10 points. Hold on. Here's 10 points. Almost at the lows here. And we want to see a fair value gap form. Looks like this might not be the play. Market structure shift will be here. Drawn liquidity here. 5-minute change of state delivery, 1 minute and 42 left. 15-minute will be here. Any SMTs? Stage one, stage two, stage three. Yeah, this might be it. Stage one, stage two, boom, stage three. We might see some more accumulation, then drop down, then run up. So we might just be waiting for time. It's 3 o'clock. Want to look at the hourly. What is this? Coming in Mississippi here. Inverse. Uh, boom, boom. Run up, run down. So what we thought was an inverse, we're just consolidating right now. In the grand scheme of things, I don't know. This is screaming, stay away. Just demo trade this. So no, this is not the play. Look how we run up in that. That isn't a play. I don't see any AMD setups either here. I don't see any accumulation, manipulation, distribution. So this is my initial target. Could come down here, which is fine. That's why we're demo balling this. All right, so I'll keep this going. Should be back soon. Damn it. Caught his New York launch lows is just like how we went up here. How many times did we hit this? Hit this like, so this is 12 minutes. How many minutes has this been since we hit this? 12 minutes is here. So we should see a move here. If not right now. So we thought this was a 5-minute chain. Instead, we only need to go into this bare shoulder block right here. Here's the bare shoulder block here. It's like a move in there, come back down. Has to come back down into a fair value gap on a 1. Then a move back up higher. Boom. So you can enter here or you can wait for retracement. What I like to do is I like to just go in there. Boom, up. Now we're going up. Now chase it. But let's just practice something. Let's just practice. Optical trade entry is here. Bull trade block is here. So we may go up, take out, draw liquidity here. So that's a very good observation about your New York lunch open or New York afternoon. So this is like 8. Here we had 12. So we're looking at like anywhere between 10 minutes, 5 to 10 minutes. Here we come down here, boom, bull shorter block on the 5, again, 15, and some manipulation leg up. And I think this is optical trade entry, right? Is this not? Let's look. Here we go. Boom. And I saw this and I'm like, it's a bit low. Look what we come to. Perfect. And we saw it too. All right, here we go. Let's put this here. Points puts you right here. Fuck it. Let's make that money back. And boom. Oh, it's not coming down. Oh, then you miss it. You miss it, buddy. What's Caribbean about this? you ask me, this is a cleaner market maker cell model. Run up, we just took these sides out here. 50% of Q2 is like up here, so you may run up into that only for us to continue coming down lower. 1, 2, 3, 4. I mean, we did measure that. That was like 0.1. And this is aggressive. Low resistance liquidity run, maybe. We'll see. Look how we just came down here. Boom, to the T. That's why optical trade entry is your best friend. That's why it's your name. And -2 matches so nicely with this New York AM session or New York afternoon session. Boom, come down. Boom. I don't know where we're going from there. Again, there's really nothing clean here. This is where we are in the day. Run up, boom, 4-hour SIBI, come down, probably come down again into this fair value gap here in the afternoon or AM session, or London, I don't know, inverse here, they continue moving up, or this might just be our pullback, number one, for this market maker sell model to the downside, if Dixie continue to move up higher. Fuck it, we'll go with this one. like Dubai. Ooh, redwoods. Ooh, rivers. These are redwoods. That's what they look like from above. Yeah, I can rock with that. There's so many. Hmm. Yeah, this one go hard. This one goes hard in the paint. This is a better entry down here. And on a higher time frame, this looks good. On the lower time frame, just look like it was yesterday. This wasn't concrete, wasn't clean, you know? So, with that being the case, I'm done. I'll just keep this recording going. We ain't got 40 more minutes left in the session. Overall, very good trading day, and we'll talk tomorrow, but we'll keep this running.